Good morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, October 10th. Markets really got smoked yesterday. We had another reversal. As you can see here in the ES, we've had an up day, down day, and really just yesterday it was just no buyers at all whatsoever. We started off nice and slow, and then sure enough, right around 11:30, markets really got hammered right into lunch, where usually the markets are kind of quiet when there's less buyers and sellers for that matter, and then the market just really they just let it all go. Oil just got clobbered as well across the board. So one day doesn't make a trend, as I mentioned yesterday. So we're looking for some downside targets, and I want to concentrate on the indexes this morning just to see what happens. Here's really the game plan. The game plan this morning is now we are in some oversold areas. We had our indicators tell us we're looking for a bounce, and sure enough, we did get one on Wednesday, and then we just really reversed yesterday, Thursday, and so that's something that you have to take note of the price action. So volatility is here. We did say that October usually we're going to see some more pent-up volatility, and we are getting it, no question about it. And usually we see what happens. Sometimes, a lot of times, actually, the markets actually kind of subside a little bit in the volatility, and then we really start looking for some bargain hunting and buying some stocks, and that's where you get that Santa Claus rally. Well, it's very early to even say that it would even happen at the moment, but there's a lot of issues out there. We're looking at a worldwide economy now, so Europe is really in bad shape, and sure enough, we're getting that cold as well, and we're in some good areas here. So I'm looking for what I'd like to see today. Again, with the game plan, I'd like to see the markets open down and really flush into the zone area of what I'm looking at here of 1890, 1900. If we can get a gap lower and really a run hard early, between 9:30 and 10, maybe 10:30, and see this stabilize, I think that's a good buying opportunity. And I'm talking just day trading, okay? We're not swing trading. I wouldn't be swing trading in this environment unless you're hedged, or if you have an option play. That's something different. At least your risk is calculated. But for today, I'd love to see a gap lower into this zone area. We're down about 7 handles now, not too much, but if we can really get this area gap down, and then that would be I'll be looking to buy as long as we get some stabilization here. Maybe create some sort of a small base and then start to break out of that base, and that would be a decent buy entry, like buy the dip for the day. If we open up, 3-4 handles, I think that's just going to be continued selling, and then you'd have to wait and see. So that's going to be really my game plan for this morning. So that's why I want to take a look at some of the other indices here. So we have the ES, as you can see. That's the daily chart. Now, as you can see, the hourly chart is just in a clear downtrend. We met our profit targets were met back here last week when we identified this head and shoulders on the hourly chart. We're in a clear downtrend, and now we're starting to move lower. And you can see this coincides nicely, this downtrend channel, right into the 1900. That's going to be the top of that zone area that we're looking at, 1900, 1890. So I'm going to be paying attention to that this morning to see what happens. And that's on an hourly. Now, the diamonds is going to be the 200-day moving average. That's really going to be the target, the first target, and then this next pivotal low back from July of 163.15. So that's going to be the next target. First target, 165.20, let's call it. That's a 200, and then, of course, this pivotal low here, 163.15. That's in the diamonds. Now, the transports met our target already yesterday. So now we got to hit our target. I've created some more downside targets for you. That'll be the normal 200-day moving average of the 141.37, and then, of course, we're going to have the 127.2 extension on this Fibonacci extension of 139.83. So that's going to be the next two targets here to the downside in the transports. Now, transports really got walloped. You can see here, really took it on the chin, and it's our leader, and it's leading on volume. So you have to take notice with the other 4 indices actually that we're following, that this is our leader, and this our leader is breaking down. Then you have our other leader, which is the IDM, which has been breaking down all year, and we hit our next target. Really was that 141.20 next area is going to be 103 right here, this target, and then of course the 1272 extension of 102.56. So 103.30, 101.56. That would be next two downside targets in the IWM. Okay, and now let's take a look at the Qs. The next area is going to be here at 93.40. That'll be that first pivotal low back in early August. So we're starting to come in now. Now, believe it or not, a lot of the higher beta names didn't do that bad. They actually were holding up very well. Again, along with Apple. So Apple really kind of saved this index, as it's been doing so pretty much all year. So heavily weighted in Apple. But now, once Apple goes, this index is going to really get hurt. I suspect anyway, and that's something that we have to take notice if you are trading technology. Another thing is watch the banks. The banks have broken down from a large uptrend line. Let me see if I can just bring this over right here. So this is from all of 2013 and pretty much all of 2014 here. Daily chart. I brought the chart in a little bit just to show you. Banks have now breaking the 200-day moving average, as well as this large uptrend line. We have to keep watch here because it could easily just hold and then start to rally again. But when the banks and technology start to really break down, you have to take notice of that. And that could just be a temporary blip, what's going on, and that's fine. But let's just keep an eye on some of these key sectors, okay, just to give us some additional clues that maybe we are in trouble. Maybe there's maybe it's not just anymore we're going to buy the dip and we're going to move higher. It could be. I mean, we're still in the bull market, and it's only been a couple of weeks of selling, which is natural, and it's good. It's healthy. And I do suspect that's pretty much all that really it is. Some profit taking. Okay, so now good news is good news, and bad news is bad news now, instead of bad news being good news and good news being good news. I know that sounds silly, but this is why we want to keep notice of certain key sectors. So now we're breaking down a little bit, and if we even broke down to like right in this area here, 66-ish area, and then start to rally again, that's fine. But if we start to break down, we rally, and we fail into creating this bear flag and really start breaking down even more, we have to be careful. We also, EEM, the emerging markets, are breaking down. China's really coming out with some poor numbers, and that's something that we need to watch. Okay, so keep an eye on what I just mentioned. Write down the levels that I mentioned this morning in the indices, and let's see what happens today. We usually get some sort of a bullish bias today on Friday, but that could change this morning. So again, quick recap. What I'm looking for is I'm hoping to get a nice flush early on between like 9:30 and 10, stabilize, and then look to buy that dip. If it does not happen, all bets are off. It's going to be a little difficult shorting down here at these areas where we've been pretty much in oversold territory here on the intraday chart. So let's just be careful if you are looking to short that for the day. Have a great weekend all, and I'll talk to you on Monday. Take care.